More than 90% of traders today end up not succeeding and being successful, profitable in the business of trading futures, all right? Because they end up not understanding one key concept, which we're going to talk about today, all right? I myself actually failed for 2 years straight, all right, before things started to turn around and I was able to see the glimmer of light through the tunnel. But I didn't give up. I never did. I didn't quit, all right? What I ended up doing was sticking to the plan, figuring out what I was doing wrong, going back to my charts and taking everything off, just simply eyeballing and looking at naked charts, all right? Now, I trade range charts, okay? And I trade using supply and demand, pullbacks to key areas of aggressive selling and aggressive buying. Now, if you truly want to make it in this industry or business, as I say, you need to master this one simple concept: market structure. You need to understand which way the market is moving as a whole. Is it moving up, where we're trending and breaking structure, okay? Market making higher highs and higher lows. As long as it's doing that, we're looking for what? Pullbacks. Pullbacks to where? To key areas of aggressive buying at demand areas. And if the market is in inverse of, meaning it's turned around, all right, we see some structure being taken out, some lows, all right, where the market is making a low, okay, and then a lower high, and then making a new low, taking out some structure, then we can shift our bias or mindset and look for pullbacks to key areas of supply. This is what I'm going to show you just in a rough nutshell today. What the market can do, what we essentially see it, how we see it trending on a daily basis, and then shifting the tide, okay? So pay close attention, all right? Another quick lesson here. So if I go up here and I just grab an arrow line, you will see the market doing some movement like this to the upside, right? Where it's making higher highs and higher lows, okay? And maybe it does this and pulls back and then pushes lower, all right? But doesn't take out a low there and then turns back around and breaks structure back to the upside. So each time the market makes a high, a higher low, a higher high, okay? And this is a nice push to the upside with momentum, and a nice pullback with momentum, and a nice push up with momentum. That's the market's breaking structure right there. And essentially, we're looking for pullbacks to key areas of demand, okay? We'll classify those areas like right here. And there can be multiple areas of demand within a swing with the market break structure. That's the number one thing I'm looking for, first and foremost. Did the market break structure? Okay. Did we have aggressive buying to the upside? Did it leave a demand area back somewhere within the swing, within the leg of a swing, or that broke the structure to the upside, and pulling back to a clean area of demand where there's aggressive buying at? All right. Now, one thing I like and I must see as part of marking or classifying what's a high probability zone versus low probability, is there an imbalance, or most traders will call it a gap, back at the essential zone itself of demand? Okay, then the market pushes up, it pulls back, more aggressive buying to the upside. There may be another demand zone here. There could be one right here. What I tell traders all the time is that if you have multiple zones where the market broke structure, meaning demand areas, where the market pulls back, or we can classify them and call them order blocks as well, pulls back, look for it to come down possibly maybe to this area of demand. Why? Because this is where essentially all the buy-in took place that gave the market its momentum to push to the upside to take out structure right here. All right. So as long as we're shifting like this to the upside, look for pullbacks to clean areas of demand where there's a gap or imbalance. Now, if you don't know what I'm talking about, essentially, or when it comes to imbalances, please go to the homepage of the channel. The little magnifying glass, that's the search tool, okay, on my channel, Futures Trading with Mike. Type in imbalance, type in gap. You're probably going to find, I know for sure there's going to be some videos that pop up to where I go into detail or discuss the gap back at the zone, all right, or the imbalance resting back at a supply zone or a demand zone. Now, let's say the market made this high here. Then it pulled back, made a low, a lower high and push lower, but we didn't break any structure to the left-hand side. So maybe this is the first run to the downside, a bearish run to the downside without the market taking out any key area of minor or major structure. Then the market is still bullish at this point. We are not bearish until we start to take out structure to the left where it's breaking through an area of either a minor or a really I like to see a significant area of like a major area of structure being taken out. Okay, so excuse me, if the market makes a high and pulls back but never takes out any structure to the left and then turns back around, pushes higher, breaks the most recent high that it came off this leg right here to the downside, guess what? We're still bullish. So again, we can still look for pullbacks to those key areas. Maybe there's a demand zone here as well, where it pulls back to one of these zones, okay? So as long as we're making this type of movement to the upside, without the market coming back and making its first lower high, low, okay? And then maybe to pull back again, making a lower high, and then breaking structure where it's taking out, some structure to the left-hand side, then we're still bullish. Now, let's say this was our final approach right here and made this high right here. The shift in the market is typically going to look something like this, where let's do away with that, where it makes its first push lower, meaning its first low, okay, and then makes a lower high. At this point, we are not really looking to go short at all. Even when the market makes this next attempt where it breaks this area of structure coming down, okay, that doesn't mean that we're still, that we shifted from a bullish movement or standpoint to a bearish standpoint, altogether. No, this is a first bearish run to the downside, a low followed by a lower high. It didn't take out this most recent high, so to the upside. So this area here is really going to be a major high right here. Okay, so now we got a low, a lower high, and a new low here. Now we got some structure here. We got a low, we got a low here, and we got a low here. Now let's say the market pulls back and makes another lower high, and then comes down, takes out this low here, and also takes out some structure to the left-hand side, meaning a low, okay? So if it does that, so we got aggressive buying, aggressive selling, followed with aggressive buying to the upside, and it takes out a low right here. Now this is a shift in the market, okay? Because the market has made its first bearish run, pull back with another, a lower high, and makes a run to the downside, and it takes out some structure to the left. So now we can start looking for areas of pullbacks to key areas of supply, okay? Or it may come up here, okay? So again, and you may have another area of supply right here where the market pulls back and tests one of these areas and may go, continue looking short. So let's say we had where the market pulled back. Now we've got a structural shift lower where it's reversed at. This is what's going to be classified as a change in the direction of the market where we have a reversal at, and it pulls back to this key area of supply. We're going to be looking for some rejection back at this area of supply here, as long as it's a high probability area of supply. Why? Because we got a break of structure, okay, to the downside. It's made a lower high followed by a new low, but it's also taken out some structure to the left. When the market pulls back to this key area of supply here, you get the rejection. Then I'm going to be looking for opportunity to go long. Go short, right? But the way I trade, I'm looking for multiple means of chart confluence, meaning this could be my 120 range chart, right? So I'll mark up that first area of supply right there. Now, I'm not looking to take the trade off 120, but if this is my higher base chart and we've shifted and formed a new direction when we're breaking structure lower to the downside, my first zone, which is going to be a supply area or supply zone, is going to be right here, okay? It pulls back to it. Then I'm going to move down to whatever entry chart that I trade from, which is my 24 range. Maybe it's a different chart for you. Okay. So when the market pulls back now, as it's approaching back to the 120 range supply zone, I'm going to move down to my 24 range chart to see if I have a supply zone on the inside of this larger 120 range supply zone. Okay. Now, again, this is what order block or supply and demand trading looks like. And you need to, find a way to really grasp and understand this if you want to be successful trading. Okay. Now, if there is a zone on the inside of the zone, and that gives me the confluence with the 120, okay, and my 24 range, then I'm going to be looking to go short and aim for areas where maybe on the movement back to the upside as we're retracing, where there are gaps on candles, which are imbalances in the market that need to be filled coming back to the downside. Okay, but you gotta be very mindful too of what's below you or beneath you when you're actually trading back to the downside once you get the rejection to go short. Because let's say this right here. Let's say the market on its moving back to the upside, it started doing this right here. You got swings going back to the upside, right? Pulls back, and then it makes its push right back to this area of supply right here, right? Be mindful if you get the rejection off the 24 range chart. It's tapped the 120 range chart. It's pulled into your lower base entry chart. It's rejected it. Be mindful that there are areas of support right below. Off of these swing areas right here where the market's made high, higher low, high, higher low. These can be treated as swing support areas or areas of support where the market could come down and react off these swings right here back to the downside. You got to be careful with that right there, because then the market can turn back around and want to push higher. So even though you're back at an area of supply, look below you to see where the market can actually stop, reject, and then maybe move in the opposite direction without wanting to push any lower, other than, getting the rejection. It comes lower, hits an area of support. It may want to continue pushing to the upside. And then once it starts doing this to the upside, where you're getting higher highs and higher lows back to the upside, and it takes out structure going back up, now it's then shifted from bullish to bearish back to bullish. Okay. So you've got to be able to mindfully see and always take a look at. I'll tell people all the time, when you get to that zone and you're looking to go short, and this is like, to execute based on the rejection of the 120, the 24 range, multi-chart confluence setup. Once you get that right here, and this is off the NASDAQ, once you get that rejection, before you take the trade, look back at your higher base chart to see what's below you, okay? Because you don't want to be trading into an area of support and holding it too long, or into an area of supply demand, for example, to where the market can react, reject, and then continue pushing higher. In this case here, let's say this was an area of demand or a support area, okay? The market pulled back to a demand area. Got to be mindful, okay? Or it pulled back and this was enough area of support where the market can hold up. Got to pay close attention, because if it reacts here, guess what? You could get stopped out as the market continue pushing higher. So maybe a stop is resting right above this area here where the rejection took place at. You picked up 10, 15 points. You think you're going to hold it through, and the market comes back and it stops you out. Not only did you lose the profit, but you also probably lost some money too, because the market gave you a full-on hard stop. All right. So this is what you really need to, well, I'm not going to tell anybody what to do, but market structure, if you really want to make money and become profitable, all right, and fulfill your goals and becoming a successful day trader, trading the future markets, you are really going to need to master market structure and know pivotal points where, if the market's bullish, looking for those demand setups. If it's bearish, looking for the supply setups, but also understanding that the market can pivot and change its direction at any given time, and you need to be able to read that, okay? That's very important. But that's all I wanted to share today, was really kind of give a overall basis of what market structure can look like. And you got to know, the painting is always going to look different, okay? That means the image of what the market is actually, drawing up or painting in front of you is going to always look different. It's never going to look the same, okay? So you have to understand that, meaning the movement that it's actually making, okay? It's designed to trip you up. It's designed to stop you out. It's designed to fool you, okay? Because there's really only three ways the market can move: up, down, and sideways, okay? And the toughest part for most traders, 90% or more, is going to be that range area, all right? They're buying, they're selling, they're buying, they're selling within a small range area, because they really can't see the overall bigger picture. And that's what I talk about. Always use your higher base chart to determine which way you really need to be trading, okay? But that's all I want to share, guys. I appreciate everyone that tunes in and watches the videos each and every single day. If you want to become an elite channel supporter, because I always get that question, scroll down to the description portion of the video. There's two links there. The first one is the Discord. It's free to join. The second one, which is right underneath that one, is the elite channel supporter or elite channel member link. Once you click on that, there's going to be two tiers that are going to pop up. If you want the trade breakdowns, where I go into great detail, talking about stop loss placement, profit target areas, talking about structure, breaking down the trades that I've taken, and I posted over on our Discord community. I go back to that private community and I break these trades down so that those individuals can understand, grasp why I took those trades, so they can look for similar setups just like that on their own charts, back tested and forward tested. Okay. Now it's only $6.99 a month. Once you click that link, make sure to choose the second tier. That's like 24 to 25 cents a day, pennies on the dollar a day. Okay. Think about it. That could be game changing for you. $6.99 a month. Okay. Now, again, it's down below. But that's all I have. I really want to cover today. If you're not a current subscriber, please take the time to sub by clicking on the subscribe button. Make sure to click the bell so you do not miss any of the uploaded content that I pretty much create and post to the channel on a daily basis here on YouTube. But outside of that, that's really all I have today. And hopefully you found some value in the video content today, kind of running you through what market structure may look like, where you have the market shifting in its direction, trying to show you that, okay? Please do me the biggest favor and click on the like button if you haven't already done so. I greatly appreciate it. That helps the information that and the content in which I'm making get out to the community of individuals who are looking for relative information just like this. So please make sure to click that thumbs up button before you actually click off this video. Thank you and have a great rest of your day. And to all those that were trading today, I hope you were successful and profitable. We got 2 days left in the trading week, and I'll see everyone over in the Discord tomorrow. Take care.